Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's have a look on the gold market. So here on the daily chart, picture hasn't changed significantly. For those of you who trade on the daily chart, we do not see a lot of things to do. It's because we mentioned the 32 area approximately is a level where we will be interested with the possible bullish signs, but market hasn't quite reached it. It means that the things that we could trade, they stand on the intraday charts. And actually we some degree discussed it yesterday. Today we could keep going with this stuff that we discussed based on the hand shoulders and upward retracement and so on. But on the daily we're still waiting. Second moment, guys, as you will see from our weekly report that we will prepare, that a situation on the gold market in the shorter term, with a perspective of 1-2 months, might change. Here is a lot of reasons. So significant technical overextension, too much hype right now in the broadcast media about gold, and too fast inflows in the market. All this is happening on the background of some relief in global geopolitical tensions. So you know, recent negotiations on Ukraine that they somewhere coming to some final stage. So European Union is also taking softer position in this question. Second is concerning tariffs. They also have significantly decreased. And some other things on the domestic arena inside the United States. So all this showing some release period. So tension period has happened, now this release period. So it doesn't mean that gold major trend is over, but based on the factors, it could take some pause and showing deeper retracement. So that's why currently I don't think that we need to take too significant risk trying to jump in on the just taking any minor standing retracement. So, and here it would be better to get a stronger background before considering the position taken. So from that standpoint of view, combination of the oversold with the confidence area seems really nice. And I think that we should not be hurry up with the decision making and trying to take position, for instance, right here on the daily chart. Still, on lower time frames, everything goes really nice. So on full time frame chart, the bounce has started precisely from the confidence area that we discussed. Unfortunately, we can't treat it as a pure bread and butter trade, just because on the daily chart you could see that here is 1, 2, 3, 4, 5, just 6 candles to the upside, which needs to be 8 by the Napoli framework. So not pure the bread and butter, but still some momentum reaction here might happen. Actually, it was already happening. So yesterday we talked about position taken based on this butterfly, and you can see in general this situation works nice. So market starts upward action. Here's just not only butterfly, but the 3 drive pattern also has been formed. But everything has happened precisely on the level that we have specified. Now market stands in upward action. The minimum target that we have promised around 33.60 has been completed, even slightly higher, almost 33.70. And now the major question whether we will get the typical for the bread and butter trade expansion to 618 level, to the 34.10 area. So to do this, market has to complete this ABCD, and potentially you could recognize that theoretically you could treat this overall action in some way of the hand and shoulder expansion. So since the position stands in the positive area, here you will have to decide by yourself what you would like to do. Common sense and usual traders practice suggests that when it hits the first target, you need to close at least some part of your position, usually 50%. And then you could do anything you want on the rest, move stops to the break even and see what will happen. With this current action, you could see that you could probably move your stops even not the break even, but closer to the bottom of the supposed right arm, right? So, and if market will continue our prediction, that's great. You will get good result on the second half. If not, you will out with some minor profit here. That's probably the scenario that we think that you could consider. Theoretically, if you do not have any position, you would like to take the long position, you could try to do this with it, but place very really close stop. Do not place stop below the head, because this action here is not guaranteed, because we do not have confirmed clear pattern that could point it. This is our just a suggestion. So since we are based on the hand and shoulder shape, the lows of the right arm will be invalidation point. So you do not need to place stop below the head. Market either has to start a prediction right from here, or it will not start it. It will mean that market just will hold this harmony that exists right now and could start downward continuation. So from that standpoint of view, this level is enough to consider stop placement. So that towards what we have in the gold, probably major events should happen next week. This week market could just finalize either its upward action to form right arm and then start downward action, or just keep going lower to daily major support. Next week we probably will consider what will happen around it. So tomorrow we probably will keep going with the minor patterns that we have here.